Hey, what's up guys? This is the Smart Money Technician and welcome to today's video. As usual, we have another banger of a video. Deeper price action insights, how to enter the correct direction, right? So the outline of this video is that we will be going deeper into price action. We will be discussing more about the TPD. We will also be going a little bit more deeper into the market maker model, and we'll show you also how to incorporate the true week reversal. Now, just some video prerequisites. These videos, the quarterly theory cheat code to daily buyers, secret to higher win rate market maker models plus time, beginner's guide to sequential SMT divergence, and the ignition model. These videos are prerequisites if you don't understand the things that are going to be discussed in this video. So make sure you do check them out. And without further ado, let's get into the video. So as usual, the first thing that you want to do before entering the market is to start off on the economic calendar. So this is the week that we will be teaching on, right? And as you can see, this is the first week of the month. However, NFP was cancelled during this week. So that means that on Thursday and Friday, we will also be able to trade since NFP is cancelled. So Monday is a tradable day. Tuesday, although having no news, is a tradable day. Wednesday, a tradable day. Thursday and Friday, also a tradable day because there is no NFP coming out on Friday. Alright, now we are on the charts and we always like to start off on the weekly time frame just to tell us if there are any salient cracks and correlations that could hint at the next week's price action. So this candle over here is the previous week's candle, right? And you can see over here that it is bullish in these two assets, while over here it is bearish. Also, where we've closed over here and where we've closed over here is hinting that price could potentially form a TPD on this candle. If it is a TPD, it is going to help us predict the price action coming into the current week that we will be entering into. And spoiler alert, it was a TPD. Now, because we know that this candle is likely to be a TPD, right? I want to show you a secret PD array that exists within the TPD. It is called a reversion level. And the way that you find it is that you go one time frame lower from the time frame that you spot your TPD. So if I'm going from the weekly, I will go to the daily. So over here, I will go one time frame lower to spot it. And over here, the reversion level exists. Now, before we get into the actual reversion level, this is a quick cheat sheet that you can screenshot to view the TPD and then the time frame that you look for the reversion level on. So you can quickly screenshot this. Now, I primarily like using the weekly TPD and the daily TPD and the reversion levels that are found within them, because I'm also use the TPD for directional bias. Although it can be used for entries, I found that the weekly TPD and the daily TPD are the most powerful, right? So these are the ones that I focus on. However, you can go and backtest these other ones to see that they do indeed work. Alright, so we're on the daily time frame now, and this purple box represents that weekly time frame TPD that we marked. A reversion level is basically a change in the state of delivery on the lower time frame of the TPD. So over here, you can see this last up close candle. When price closes here, closing below the opening price, that is a change in the state of delivery. This change in the state of delivery usually takes place within the second half of the lifespan of the TPD. So this box represents the lifespan of that TPD, and can you notice that within the second half of it, we get the change in the state of delivery right there. Alright, so as you can see, I have marked the reversion level, and you know that it is a change in the state of delivery. Now, you might notice that this candle is a down close candle, yet I've also marked it. The reason why I marked it as well is because this candle is a up close candle, and it is the same candle as that candle. Therefore, we will also treat this candle as a reversion level as well. Now, you would also notice that in Dow Jones, I didn't mark it in Dow Jones just because I don't really trade Dow Jones. I'm also trade ES and NQ. Now, you will also notice that I marked the reversion level with the word OB representing order block just because the reversion level acts as an order block, even though we know it's an actual reversion level. Now, another thing is that when you have a weekly TPD and then you get your reversion level from that, the nice thing about specifically the weekly TPD is that it can give you the directional bias if you use the reversion level. So the direction of the change in the state of delivery usually is the bias for the week. That's why it makes the bias very, very easy to know when coming into the week. So as you can see, I've adjusted my box to the last candle belonging to the actual TPD, right? And we have that reversion level right there. So coming into the week, what you want to see is that price opens, trades into the reversion level, and then we can see price trade lower. We might see some kind of cracking correlation to justify it, but yeah, once price gets into the reversion level, then we should expect bearishness. All right, so We are currently on the 1 hour time frame, and what I've done is I've allowed the Asia session and the London session to play out because I only trade the New York session 9:30. So coming into the market, we opened and we traded lower and we did not reach the reversion level. As this was happening, I saw what looks like a market maker model forming, and the reason I believed this was the case is because we got a true change in the state of delivery. When these last two down close candles, price closes above them, closing above this opening price as well, this is a true change in the state of delivery. At the same time, I saw a non-sequential SMT supporting it. So when I saw this, I believed that price is going to use this as a reason to reach into the reversion level before we finally get our actual bearish price action. So this is one of those scenarios where you can trade counter the trend before you eventually trade in the direction of your bias. All right, so I am on the 15-minute time frame, right? And we are about to enter into the New York session. Now, anytime I see that on the 15-minute time frame that Asia session traded down with London session as well, and then we start trading up and we're about to enter into the New York session, the 9:30 window, which I trade, I go to the M15 time frame, and then what I do is I look for an order block there that has not yet been tested. So price did not trade away and retest it or anything. It is untested, and as price expands in my direction, if I had a crack in correlation already, then I want to see that possibly a 1 minute fair value gap forms inside of this level right here. You see, so there are two entries that I use specifically on the 1 minute time frame: the ignition model, which you can go check, and if a 1 minute fair value gap forms inside of this level, that is the only instance that I use the 1 minute time frame. All right, so it's about to be 9:30 and I'm on the 5-minute time frame because the smart money reversal took place on the London lows. So I don't want to see price come back below the London lows. So I wouldn't expect a daily cycle sequential SMT between London and New York. So that's why I'm on the 5-minute time frame. So now all we have to do is see what happens at 9:30 window. And what you can see is that Dow Jones comes, spikes the low of the Q2 of the 90-minute cycle while ES and NQ expand higher. This would initially be deemed as a sequential SMT that is not in sync because these ones are all the way in premium. But because Dow Jones spiked the low and immediately went back into sync by trading higher as well, getting in line with ES and NQ, this is a sequential SMT that I would be interested in getting on board with. So right now I'm on the 1 minute time frame and a fair value gap formed inside of the level that I talked about, right? So I've placed an entry and my stop loss and my risk reward at 1:3. We will see what happens with this trade. Price triggers us in, right? We will place our stop loss and then we'll also place the take profit as well, and then we will see the trade pan out, right? Just confirm it, right? And that's how the take profit of the trade gets hit. All right, so Monday has panned out and it expanded towards the reversion level. Now, as you can see, ES is deep inside the reversion level, as well as Dow Jones is within striking distance of the previous week's high. If you were to sell at the reversion level for a short-term trade, right, you would rather sell in NASDAQ because it's the asset that is furthest away and has only recently traded into the reversion level. So it will be the least asset that is likely to stop you out of your trade, right? So that is it. All right, so currently we are on the 5-minute time frame and it's about to be 9:30 and we want to see a crack in correlation that could potentially form. What I've marked is the 90-minute and the daily cycles previous quarter's high, right? And we will see whether we get a crack in correlation when 9:30 opens. So as 9:30 opens, it takes out the 90-minute cycles Q2 high, the previous London sessions high, and the previous week's high as well. So we have a monthly, a daily, and a 90-minute cycle sequential SMT taking place simultaneously. Now, if you look very closely, ES spiked into premium while the 90-minute cycle sequential SMT was taking place before it eventually rejected lower. So this SMT is a SMT that is in sync. It's just one that is extremely fast. At the same time, it is also confirmed by TPD as this is a bearish candle and this one is a very big bullish candle. So we know a TPD is going to form there. Now that the SMT is verified and valid, I do want to show you guys the other entry types. So over here, you can see I did mark out an M15 untested bullish order block in which we can use to catch a 1-minute move. However, I don't want to focus on that move, even though it worked, right? And you could have used that. I want to show you guys the other entries that I use. So initially, I tried to first catch an ignition model or this model where I use the M15 untested order block with a 1-minute fair value gap nested inside. If I did not have that scenario taking place, I will wait for a 5, a 4, a 3, or a 2-minute fair value gap that forms that at least have a break of structure in my direction. So on the 2-minute time frame, the 2-minute time frame was the first time frame to meet that criteria. As you can see, we have a break of structure in our direction with a 2-minute fair value gap. So that is why I'm going to enter here. And I always put the stop loss at candle number 1's high of the fair value gap sequence. So this is candle 1, candle number 2, which is the fair value gap, and candle 3. I put the stop loss at candle number 1's high, right? And we're going to see what happens. We get triggered into the trade, right? And let me just place the stop loss and the take profit as well, right? And then we will see what happens with the trade. So the trade eventually pans out and it hits our take profit just like that. And that is the 2-minute time frame entry that I used. So we're on the 1-hour time frame, and you can see price traded in the direction that we anticipated. A key takeaway is that the two sequences that prevents price from reaching the original consolidation is a if-then day leading to a change in draw on liquidity. We've discussed that in the previous video. Another thing that also prevents price from reaching the original consolidation is a true week reversal. That true week reversal will also lead to a change in draw on liquidity as well. So we had a weekly time frame TPD and a monthly cycle sequential SMT. That in itself is enough to constitute a true week reversal, which is why price does not reach the original consolidation and now it's trading lower. So we would seek the lows that are below the marketplace. So we are currently on the M15 time frame, and you can see that we have sequential SMT on both sides of the marketplace. However, because we are bearish, we will ignore the bullish sequential SMT that is taking place. But another thing that we need to take note of is that the bearish daily cycle sequential SMT is a low probability sequential SMT. And the reason that it's a low probability sequential SMT is because it is taking place in Q1 of its lower time frame cycle. This means that during the New York session, on the 90-minute cycles Q1, this is when that daily cycle sequential SMT is taking place. And generally, that is low probability. You don't want to see the sequential SMT happening so early when your New York session starts. So what then happens is that during Q3 of the 90-minute cycle, that SMT gets confirmed with a bearish sequential SMT on the 90-minute cycle. So we know that the SMT that was low probability is now confirmed. So that then led to a 2-minute fair value gap forming. We have break of structure in our direction with the fair value gap. So we're going to enter in on this fair value gap since it's a valid entry, and we will see what then happens, right? And price trades, triggers us in, and then it starts to trade in the direction that we are anticipating, right? So we will see what then happens, right? As the trade pans in our direction, it retraces a bit, comes back, but we are not going to fear. We will leave it to do what it should do, and eventually it hits the take profit as well. All right, so on Thursday we had a bearish 90-minute cycle in the direction of our buyers, right? Which then led to a 3-minute fair value gap forming in our direction. And as you can see, we do have a swing low. Price does trade below that swing low, forming this fair value gap over here. So we will use that fair value gap as our entry, and we get triggered into the trade, right? And we want to see what then happens, how price is going to go, whether it hits our take profit, right? So sorry about that. If you can see, price does actually hit the take profit, right? As you can see. And finally, it is Friday. Now, what happened on Friday is that you see this last down close candles that led to the lowest point that price traded. Price stagnates and then eventually closes above there, which is a true change in the state of delivery. So in checking this, we zoomed out and we can see that there was a very large SMT. If you could look at this low, was not taken, but in the other asset, it was taken over there, right? So because that happened, right, we would anticipate that we are seeing multiple consolidations, expansion, consolidation, expansion, till we get this change in state of delivery. So we are seeing this area as a smart money reversal that is taking place. So coming into Friday, this makes sense, as this would be a TGIF trade, a trade back into the range, and a short-term target, since it's Friday, would be these highs that are in striking distance over there. So on the 90-minute cycles, what happened is that we formed a bullish sequential SMT to confirm that direction that we were expecting. So on the 1-minute time frame, we got the ignition model. Again, you can watch the video on the ignition model to understand it. So I'm using this fair value gap. This is the first presented fair value gap, but I just combined the two because it's so close to one another. So sometimes it might not get to the first presented fair value gap whenever you have this scenario. So it's best to just use the two as one single fair value gap. Let's see what happens. We get triggered in the trade, stop loss, and then we'll place the take profit as well. And then what I will then do is I'll go to M15 just so that this can be much faster, because this trade did actually take some time to pan out. Eventually it hits the take profit as well, just like that. So this particular day gave multiple fair value gaps. It would have been hard to actually miss a trade on this day, although it did take a very long time to pan out. Now, all in all, from this video, you can see how we learned how to use the TPD, the reversion level. You also learn how you know when you change your direction of your draw on liquidity using the true week reversal, and how you establish a bias or direction, a draw on liquidity, using the market maker model. So by using the market maker model or using the true week reversal, it's very easy to have a direction that you are expecting, and then you can use the different entry techniques that I showed you in this video, starting with the ignition model and then the 1 minute fair value gap that forms inside an untested M15 bullish order block. That is what ICT would call the institutional order flow entry drill. And also the 5, the 4, the 3, the 2 minute fair value gaps. In fact, in some cases, an M15 fair value gap, right? So by doing this way, you can be able to trade the direction. And you can see that it only takes a little bit of practice. Once you've practiced it, it only becomes easier, and you simply just rinse and repeat and follow the same protocol. And in the long run, you should be profitable. Make sure you guys like, comment, and subscribe to the channel. More content coming in the future. Peace.